Good morning. It is Monday, June the 11th. We've had some pretty big news over the weekend with Spain banks getting bailed out with up to $100 billion they can pull, or 100 billion euros actually. And of course, bailout usually increases liquidity, and we will usually see the equities market move up. And that's what we started to see. There's rumors of that talking on Friday, and this weekend it came through, and that's really caused a big surge in the equities prices. And of course, the US dollar has gapped down sharply this morning. Now, if we just take a look at the US dollar index, you can see here last week we saw a nice climb in the US dollar index, put in a nice bottom. Market started to pull back, and then we got this headline news. Of course, it sent the US dollar tumbling back down into the support zone. We do have a couple Fibonacci retracement levels here, depending on where you pull the levels from. We're also into this blue support level, which we're actually seeing a nice bounce. I sent out an update last night when the US dollar was trading right down at this level, saying that we are likely in for a bounce in the US dollar index, which will pull the equities market back down. Just lining up some bottoms here roughly. You can see we're bouncing support all the way down. Kind of got this upper band here. So if, with any luck, we'll see the US dollar actually continue to head up and possibly go even higher. But this big gap down put the US dollar into an oversold situation, and of course moving down that quickly and into a pretty major support level, this bounce is unfolding just as we planned, and hopefully it will end up continuing higher, at least to fill this gap, if not continue higher for another day or two and work to the upper end of this range, which will pull the equities market lower. So let's take a quick look at how things are affected. We'll just start off with energy. Here is the crude oil chart, and crude oil had a big gap up simply because the US dollar fell down sharply, and now that the dollar is starting to bounce, we're seeing crude oil come back down again. We're starting to come down to fill this gap. Most gaps tend to get filled, so usually when you get these big pops, you'll see usually a fade back down to fill the gap, and then from there you need to really see if it's going to stabilize and start to go higher, or if it's actually going to just continue to bleed off and head lower. Now this is a 4-hour chart of crude oil, and you can see here the most recent move that was confirmed by distribution selling in crude oil. And you just draw a line through the middle here, more or less, where you can see we've got more or less neutral volume, and it's forming another bear flag, so there is potential that we could see crude oil continue to work its way even lower yet. It may be trying to form a base here, but overall the price action is still pointing out that there's still sellers in control, and then they let off for a little bit. If sellers step back in and volume ramps up, we'll see price continue to head down in crude oil. Looking at natural gas, natural gas continues to slide. It's got a little bit of a bear flag forming here on the 4-hour chart, and it looks as though it still wants to head lower. Now here we're trading, I think the next stop for natural gas is probably be around the 220, which is pretty much, if you just draw a line across here, you can see you've got a couple key pivot levels. You've got this pivot low back here. You've got this level here where it consolidated for a little bit and ended up breaking down, and then it came and acted as resistance, and then right over here it came up and broke through it as a resistance level and moved higher. So that'll be the next stop. And just looking at this chart here, you got a nice move down, mini bear flag, you get that same measured move down, and that'll bring you around to the 220. So that looks as though natural gas is headed next. Looking at precious metals, here is the gold 4-hour chart of gold. You can see we had a nice run up on Friday in prices, and the rumor talks of Spain getting bailed out obviously would make things more for inflation, and we saw gold run up in price. We've got a little bit of a gap up. It started to sell back down this morning. Really there isn't much selling volume this morning, but it's pulling back. We'll see how things kind of unfold through the session. This week is going to be a pretty crazy week really, with talks about the Spain bailout, and of course everything is going to be hinging on the Greece elections later this week. So for the market to really keep heading higher, I think it's going to be very tough. There's some major unknowns, and the fact that the SP 500 gapped up in futures trading last night to major resistance along with other indexes and commodities. Uh, I can't see them really holding up. I think sellers are still lurking up at those levels and pulling money off because there's still a lot of uncertainty, and we really need to see what's going to happen with Greece before big money is going to really get committed to the market. So right now I think we're in some pretty choppy territory for at least a week, if not 2 weeks, and then from there we'll probably see some trend really pick up and either see equities move a lot higher or continue a very sharp sell-off lower. So we're going to be in some pretty choppy times, I think, for the next week for sure, and we'll see how things unfold going forward. Overall for gold, if we just zoom out a little bit more on gold here, you can see still overall in the downtrend. Had that pop on news, came back down, and now it's just kind of trading in no man's land. Overall, the big picture here is still relatively negative. The trend is down. We've more or less had a strong sell-off here. It's consolidating. It's stuck under this resistance level, and overall, I'm not looking to get long gold just yet. It could easily continue to work its way lower, but a lot of this is going to be moving a lot with what's happening in Greece and the bailout and how things slowly unfold this week and next week. So a lot of uncertainty, and I don't want to get too involved with the market just yet with all the headline news coming out. Looking at gold miners, they've been holding up well. They've kind of flipped their pattern here in the recent week. If we just look at this chart, you get a nice run, you get a pullback, you get a run, you get a pullback, you get another run. More or less you get a consolidation, and then you get a nice strong move. Now the way gold miners move, they kind of run with a flag flagging up. Usually means you're going to get a pullback, and we get a nice controlled pullback. Same thing we had for them here. You get a nice actually it was a little sharper pullback here, but now we're starting to see more of a bear flag start to form as opposed to a controlled pullback. So we've got a flag pulled down, we're getting a flag flagging up, and this usually points to actually lower prices. So we could see actually gold miners pull back and consolidate here for another few sessions, and that actually indicates that we could see gold and silver continue to be under pressure, as I just pointed out on the gold chart. So that's kind of where we stand right now. It went from more of a bullish uptrend to a very strong down session with a bear flag forming, and it looks as though we could see another move down that could last a session or two, and then from there we'll have to see how it consolidates. Looking at silver, here is the silver chart, and more or less it's has yet to break above its key resistance level. Same with gold. Both of them came up, tested this similar level, and they've pulled back. And overall, you look at the silver chart, and we've got a strong move down, and we've got a little bit of a bear flag. This could continue to come back down to the lower end of the range, down into this level here, as the market chops around, and there's a lot of uncertainty this week. So we'll just really see how things are going. You can see this big down session here happened on some pretty big volume, so there's still some pretty big sellers out there, and obviously if things don't bode well for precious metals, the sellers just step in and unload their position. So we'll see how things unfold. Overall, I'm neutral on gold and silver. They remain in a downtrend, but I think at a blink of an eye they could start to put a nice move up and start to trend higher for much higher prices. But overall, I'm not jumping the gun just yet. I'm going to wait till I see more of a basing pattern or a bottoming pattern before we get long. Looking at bonds, money's been coming out of bonds last week. Simply equities have been going higher, so it's been a risk on, and money's been coming out of these risk off assets. Looking here, we can see it's starting to get a little bit choppy, and we've had a couple moves to a high. I wouldn't be surprised if we see bond prices come back up and possibly test these highs or come back up to the halfway mark, and of course that means equities will likely pull back a bit. So that's kind of where we stand right now. Overall, still a nice strong trend in bonds. They're starting to get a little more volatile with this strong jump, and it came back. It could consolidate sideways here, which is what I pointed out last week. We may just see this trade sideways for a while until the uncertainty kind of starts to stabilize and we see a trend in the market, and then this could either continue higher or lower. But overall right now the trend for bonds is up, and the price action should most likely be sideways to higher still. Looking at the SP 500 daily chart, this is the futures. You can see this red candle here. This is the last night, today's price action. It came up, had a run up, and now it's starting to sell down as the US dollar bounces. And you can see we've broken this previous high, which is where we had our stop set. And because we're trading, depending if you're trading futures or ETFs, futures you may have got stopped out. If you had your stop in there, you will have got stopped out. ETFs, obviously we don't get affected until 9:30 at the open, and that's more or less what my strategy is based around. But overall, we're seeing the equities market start to sell down this morning. And what happens, usually you'll see a pierce of previous highs or support and resistance levels in the market, shakes the market out, and a lot of times it is a news event that causes those big spikes, and they get sold into very sharply. And just looking at this here, you draw a line across, we've got major resistance here. This is a big consolidation. There's many levels back here that are also coming down to the same level, and of course sellers are still lurking there, and they're stepping in this morning, pulling prices down. So we're going to, as I mentioned last night in our update, I'm removing my stop on the ETF for now. Going to let the market start to play out a little in the morning. There is a good chance that this is a kind of a breakaway, that more or less an exhaustion gap where you see a price up, shakes the market out, and then you could see prices drop extremely sharply after that. Possibly just back down into a range, or even to new lows. So we're going to see how things play out and adjust on the fly. So I'll be updating several times this morning as the market slowly unfolds and we adjust our positions. Now taking a look at the intraday SP 500 charts, you can see all the different levels. You can see where we gapped this morning. I've got support and resistance levels drawn all the way back in time. If we zoom in to make it a little more clear, you can see how we gapped up, came almost up to the 1350, which is about a 20-point move in the SP 500, and now it's sold all the way down to 1305, which is almost where we had our stop. We have our protective stop at 1304, so we're only about a point away. And so you can see here it's really starting to bleed off this pressure, where you get a big pop in drop session, which means you get a big pop in price above resistance, shakes everybody out, all the shorts cover, and then the market actually sells off and goes and makes new lows after that, just after it shakes everybody who's on that bandwagon off. So that's kind of what's unfolding, and how we're going to kind of play things today, as we might see it continue to bleed down and actually move sharply lower yet. Anyways, that's it for now, and I'll talk to you in a little bit. Bye bye.